Short. Just got YouTube going. Welcome, welcome. Good morning, everybody. Hope you're doing well. Welcome to the educational room. Good morning, Stuzio, Luciano, Ron C, Miss Cindy. Nice to see you guys. Hope everybody's feeling good, ready to take the bull by the horns and all that good stuff. Good morning, JW. What is today? Today is Tuesday, right? Yeah, it is. Tuesday, the 16th of January. It is cold everywhere. We're posting it. I think I'm sitting at 10 degrees. I think Gary was a negative 10 degrees. Not that it's a competition, but Gary won today. 56 going to 72. Man, Ron. Hold on. Let me see if I can find a flight. Man, 70 there, Luciano. No, you guys made your decisions. You know what? Texas is great. 11 months out of the year. We get a little bit. Oh, E. Webster, that was good timing, man. I was watching that game the other day. That looked miserable. 26 is doable, Don Sanchez. Sarasota last week. Did you go say hey to John while you were in Sarasota? Man, he loves meeting people. You should have if you didn't. He's got a cool little place right there on the bridge to Siesta Key. No, always bug John Novak. He's always down for a little sushi and a cold beer, so he's a good host too. Miami, 77. Gosh, guys, I'm jealous. I'm jealous. That's all right. When Miami is 105 and 112% humidity, we'll see how you're feeling, Miss Cindy. I know. Houston's the same way. I grew up in Houston. Beach time. Amen. I miss beaches. This summer, I'm going to make a beach run all over the place. Uh-oh, it just paused my stream, guys. Let me knock down my Discord real quick and bring it back. I'm not sure why it does that, but it does every now and then. So, 1 second. Hopefully you can still hear me. Is education room coming back? 1 second. Getting close. Can you guys still hear me though? We good? LA is 54, C-Dub. That's not bad. 54 is doable. 54 is doable. I can play golf in 54. Good stuff. All right, guys, I'm back. Let's check news first. If you were watching at 8:30 a.m., you saw a pretty good spike from the Empire State Manufacturing Index. It just kind of rattles things loose sometimes. Whenever there's that high impact, medium impact news, there's always the potential for the market to spike or jump or bump or reverse, or you never know. And the reality is you just never know what the market's going to do. So that's why we trade patterns. But Empire State Manufacturing Index, it was high impact, that red box, 8:30 a.m., and it did make a difference in the news. And having that awareness that it was coming allowed you to not get in the way of that reaction. And that's really one of the first advantages that you give yourself each and every morning is just check that news. So let me give you the link. We do have the WEF annual meetings. They're going on all day. They're medium impact. If somebody comes out and says something silly, it may change things, right? It may make something bump. Maybe that's what happened to crude oil earlier. I'm not sure. If you were watching crude oil, there was a big spike, like out of nowhere. I got slipped like, oh my gosh, 20 ticks. I hit buy now and I was in like 3 days ahead. So kind of crazy. Every morning I go through and I check this, guys. I want to know when the news is happening. I want to know when things are going on. And then we're going to talk about really extensively one trade this morning, guys. We'll look at other trades. We're always going to look at opportunities that are available. But we're going to start the day like we do every day. We're going to talk about rules. We're going to talk about a high probability trend trade. And we're going to talk about this trade because what it does is it teaches you to read your indicators, guys. It teaches you to be able to recognize what's happening in the market because your indicators say so, not because your gut says so. It teaches you to understand where the market is likely to continue, where it's likely to go, and also where the market is likely to stop. And all of these come together to create a trade. And a trade that we're going to talk about this morning, that high probability trend trade. This is a trade that typically wins 70 to 80% of the time. And really, this is a trade that only has 3 rules, and each rule creates a momentum. And I'm going to use this as a segue. Don Sanchez, can we go to your chart, if you don't mind? And I'm going to take a look at one of my favorite questions in the room, guys. Is this a scenario for a long trade, right? So what you're asking me is, hey, should I go long here? Should I take an opportunity to go up? Should I do this? And guys, I'm going to talk about this. And Don, I'm going to talk about this. My goal for you guys is to be able to replace, is this a long? And replace it with, my rules were or were not meant for a long. And I do this a lot every day. And I talk about this every day. And I talk about annotating your charts. And not for me, because, guys, I can look at your charts and I can make a decision instantly because I've been reading indicators for a long time. The idea, Don Sanchez, is that I want you to look at this chart and I want you to say that this reversal is a great sign. This reversal off of a key area, that's a strong bottom and that's a good look. And this momentum is an outstanding look as well. But the challenge with this one, Don Sanchez, if you're following the rules for the high probability trend trade, is you have absolutely no room in front of you. You've already reached your target. You've reached Fibonacci resistance. Every one of your indicators is below it. Your triggers are below it. And this is what we call a termination condition. This is a likely to stop area. So what it does is it pulls the advantage of a clear path. It pulls that second rule out of the equation, Don Sanchez, which means that you have no room to a profit target because that profit target has already been reached. So when you post the picture and you say, hey, is this a scenario for a long trade? I don't know your rules. If your rules say, I will trade into a red fib with divergence and split triggers and none of my areas inside of the triggers, then absolutely, that's a long trade. If you're following the high probability trend trade plan, it is not a long trade. So it's imperative, guys, that when you post in the room, you have to tell me your rules. You have to tell me what you're looking for, why you're looking for it. And that's really what this first hour does, is it starts talking about advantages. And it gives you the opportunity to speak in terms of advantages when you look at your chart. And that's kind of the goal every day, because momentum from rule number 1, a clear path from rule number 2, and an entry area from rule number 3 are the recipe for the highest probability trend trade that you can take. And Don Sanchez, your particular picture was without a clear path, and the entry area was also skewed. So not a high probability trend trade, definitely in the lower probability scenario. I hope that answers your question and hopefully sets a little goal for you guys. You're welcome. Write your rules on your charts. Get in the habit now, guys. The reason we do that, you have a question here on your chart. Is it about the trade or is it a rule question, Adriana? And Adriana, what do your rules say? I saw that it posted the annotated. So let's write your rules on the chart for a 50-50 trade. Do you have rules? Or are you using the KISS trading plan? And guys, remember, this is what makes it easier for me. So I'm going to take a picture of 50-50 rules. Whoops. And I'm going to take pictures of high probability trend trade rules. And what we're going to do is we're going to stick these on charts a lot today. We're going to drop these onto charts. And we're going to start answering our questions. I love it. This is what we do. But I want to talk about the rules before we really get into that. So, Adriana, if it's cool with you, I'm going to go through the rules. Actually, you know what? Let's do it. Couple different things, Adriana. One, there's no divergence. Those are one-to-ones. Two, it's not a 50-50 because your small triggers haven't broken support yet, and it's the large chart that defines areas. So what you're seeing right now is resistance to support to resistance to support. The momentum is growing, but it's not there yet. If the rules were met, it's in the right spot, but there is no divergence. Those are yellow one-to-ones. That's a 100% Fibonacci alternate. Divergence looks like the cyan line right here, but it's the large chart that leads the way. It's the large chart that we're going to define these rules on, and the large chart will define your direction, momentum, and areas. We're not going to let the small chart talk us out of trades if the large chart gives us the information that we need. Does that help a little bit? Awesome. So 3 rules, guys. Each rule provides an advantage. Rule number 1, strong triggers provides the advantage of momentum. Rule number 2, no termination conditions, room to the profit targets. That provides the advantage of a clear path. These are the first tool, and these two must be met to look for rule number 3, which are going to be your rules for entry, using a limit order to buy or sell a pullback at an area on a smaller, faster chart. And that's going to give you the advantage of the entry area, the best of the best spot where the market is most likely to continue. And it's these 3 advantages put together that create a high probability trend trade, guys. And it happens on 2 charts. And I want you to remember, let the large chart lead the way. The large chart is a broad stroke of a brush. It is what the people in charge want to have happen. The large chart represents the big crowd, the people with the money, the guys that are moving the markets. And when the large crowd defines the direction of the market, your best case scenario is to go with that direction. And when the large crowd provides you momentum through rule number 1, the odds are favorable for that market to continue in the direction. And then when the large crowd hasn't reached an area, there's nothing in the way, no spot for a reaction. It's going to give you a clear path through rule number 2. It's going to give you room to hit that next target. All of this happens on the large chart, and it happens on the most current bar, like the first bar on the chart. When these rules are met, when you have rule 1, momentum, rule 2, clear path, you're going to turn your attention to a smaller, faster chart. And this is a refinement chart. And the refinement chart is what the small crowd wants to have happen. It's the easiest way to think about it. These are the people that don't quite have the accounts to move the market. They don't quite have the steam to reverse it from the middle of nowhere typically. And they give these little pushbacks, these little shoves. It's that little shove on a small chart that refines the broad stroke of the brush. What happens in 1 bar on the large chart happens in 15 to 30 on the small. And it allows you to reduce your risk, to maximize your profit potential, and it puts you into the market at the absolute best of the best spot. So we're going to use 2 charts initially, guys. You will grow outside of 2 charts. There's no doubt in my mind. There's people in here that use market flow charts. There's people that use higher time frames. But for this class, we're going to use 2 charts, and we're going to use 3 rules, and we're going to focus on simplicity. And we're always going to speak in terms of advantages. So if you post a trade, talk about the advantages that you see. And the flip side is talk about the disadvantages that you see. You're just becoming a chart reader right now. To take a trade is wonderful. To be able to read your charts and have your indicators tell you to take the trade is how you build a plan that's consistent, that wins more than it loses, that gives you the potential to repeat those winning moves over and over. And you're going to do that with the path to becoming a confident trader ASAP. Post your trades in class. Win, lose, or draw. Post your trades in class, guys. Don't hide your losers. Losers are where the magic happens. Losers are where you're going to get the best information. Don't hide it if you mismanage, because it gives us an opportunity to talk about management. Don't hide it if you take the wrong entry, because it gives us a chance to talk about entries. Show me everything that you're doing, and what you get out of that is a private session. Is I'll click on your chart. We'll talk about advantages. We'll look at your entries. We'll look at your questions. We'll address everything that you have. And you'll be able to take that and move just a little bit closer to your goals. So post in the room, guys. The people that post the most, these are the people that ultimately make the most money the fastest, without a doubt. So once again, I'm going to put this in there to remind you, this is really me on bended knee, guys. Tell me why you did what you did. There are no wrong answers. I want you to make mistakes. I want you to screw it up, because every time you do that, every time you create a little bit of perceived weakness, you become stronger. So, man, let loose in this room. Show me where you entered. Maybe we can work together to find a better one, or maybe you did it so well that I want to steal your picture and teach class with it, right? Or show me where you got out. Let's talk about it. Let's look at the advantages. Let's see if we can help you develop a management plan that suits your needs. That's the first half. Post, 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 guys. Keep me busy all day long. The second one is use your spreadsheet. Use the spreadsheet that Nexgen provided. It's in the Study Picks folder. This is what it looks like. Let me pull mine up. There's 3 pages. There is the copy of the tracking page, guys, and this is where it all begins. This is your trade journal. Everything that you do every day, you should take a picture of. Everything that you do, whether it's a chart read or a trade or whatever, take a picture, write on it, annotate it. Give yourself something to study, because what you're going to do is every morning you're going to open this spreadsheet and you're going to look at what you did yesterday. And you're going to say to yourself, what worked? Well, the things that work, hopefully, are the patterns that you're trying to recognize, the patterns that are going to bring you success. And what didn't work is typically going to be the things that aren't. Maybe you traded into that termination condition. Maybe you didn't have the advantage of momentum like you wish you had. Maybe your entry was so early that you got stopped out right at the best of the best spot. But what you're going to do is you're going to recognize patterns in the market, and then together we're going to recognize patterns in you. Everybody has a thing, guys, and I have this weird gift for recognizing your thing. All I need is for you to post it in the room. What feels easy is what we want to do. Rules met, advantages in place, everything is great. And you'll find that when you break your rules, especially if you're talking to yourself in terms of advantages, it feels forced. It makes you a little nervous. Your palms get sweaty, your pulse goes up. But this brief historical study each morning, guys, it's going to prepare you for the day. It is going to accelerate the learning. I know it's true because that's how I accelerated my learning. That's how hundreds of people before you have gotten to where they wanted to be. Recognition through repetition. So we're going to take the morning and we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. We're going to talk about that high probability trend trade. You will be able to identify the advantages, the advantage of momentum, a clear path, that entry area. And we're going to do it repeatedly. We're going to look at examples all throughout the day. We're going to look at examples on your chart. And the idea is that you begin to recognize these looks. You start to know what they look like. What is it going to look like when I get into the market? That's where we can go back to the spreadsheet again. And every time the rules are met, take a picture, drop it in. If somebody else drops a picture in the room and it's a high probability trend trade and it's absolutely perfect, and I'm like, man, David, way to go. Steal David's picture. Put it in your chart. Man, this is what I want it to look like when I trade. And then there's the third one, guys, and this is the client's trades. This is where you guys have posted in the room. You guys have told me why you're doing what you're doing. You've presented these trades that revolve around advantages, and they were so spectacular that I had to steal them and fill up a spreadsheet with them. And there's almost 300 pictures of you guys following rules, you guys taking trades maybe a little outside of the rule, but still embracing advantages. There is the entry sequence for shorts and longs. We added long yesterday together as a classroom. There's all sorts on management, patterns that repeat themselves, termination conditions, those likely to stop areas. And then for you guys that are easing into the NASDAQ, there's a section on NASDAQ. Everything that I teach in this room is really revolving around crude oil and the S&P. NASDAQ is very similar, but a little bit different, and there are some nuances. And if you're not aware of those nuances, if you're not paying attention to them, NASDAQ will chew you up and spit you out. It's a faster moving market, so much so that the time frames used for entry and analysis are even higher than crude and the S&P. So I always like to see you guys get the basics down on the easy stuff and then branch out. But when you get to NASDAQ, Nothing is off limits in this class, guys. Ask for help. Same thing with market flow charts. Same thing with anything you need help with. I want you to ask because I like to answer. So we're going to learn the rules. You guys are going to simulate. You're going to take trades. You're going to win. You're going to lose. You're going to cry. You're going to laugh. It's going to be a roller coaster of emotions for the first couple of weeks. But if every time you do something, you drop it in the room, we're going to have a discussion about it. The idea is that you are practicing rules, that you are taking trades that are repeatable, that are you're able to study them, to go back, to prove that the pattern you're trading wins more than it loses. If you win and the rules are wrong, it's a short-term victory. And I hear it in the classroom all the time. Man, Mark, I broke every rule, but I made $200. Yeah, but you're probably not going to make that every time. And the odds are favorable that you're going to lose that one more than you win it. But the market loves to let you get lucky every now and then to build this false sense of confidence. And it ends up in this long-term failure. Your short-term victory rarely translates to long-term success. We're going to simplify. We're going to talk about the high probability trend trade until you're sick of me. We're going to introduce what we call a medium probability trade. If a high probability trend trade, every indicator agrees for the trade, that's the best of the best. That's a trade that typically wins 70 to 80% of the time. A medium probability trade means that there's a problem. It means that an issue exists. We're going to use the language of advantages to identify the issue that exists. The one that I'm going to introduce you to today, you won't have a clear path, but you will get a recipe for taking it with the highest chance of success. And that medium probability trend trade has to be managed assertively. Your ability to read your indicators will allow you to manage it assertively. Profits might be taken a little quicker. Getting to a zero loss level may happen a little faster. So understanding what kind of trade you're getting into, all the advantages, let's rock it. Missing one, let's get our management hats on. So we're going to talk about two of those. You guys got to learn the looks so they're easy. You've got to learn the looks. And this class is designed to really put the words of the rules and associate them with the looks. So there's a progression. Rule number one is understanding which way the first thing is making sure you know which way the market is trading. Large chart tells you that. Then understanding if you have momentum, couple that to the direction, and you're already halfway there. And then we'll start talking about making sure there's room to the target. We'll add that to the previous two lessons. And then finally, you're going to be able to pinpoint where the market is likely to continue. Don't put the horse before the cart, guys, or the cart before the horse, or however that saying goes. Make sure that you're keeping it easy initially, and then you'll grow from there, without a doubt. So I'm going to drop this in the room, and we're going to talk about some rules, and we're going to look at them visually. I know this seems weird, but I've got a pretty good idea what the rules mean, what they look like, so I'm not going to ask for clarity. That's your job. If you need a little help with momentum, ask for help with momentum. Same thing with termination, same things with entries. Guys, just use your voice all day long. This is your classroom. This is not my classroom. I am just the guy with the microphone. So we're going to start with rule number one, guys. Rule number one says that I must have strong trigger lines. And in order to have strong trigger lines on the large chart, I have to be going with the direction of the chart. So let's define it. If the background is green, we're in an uptrend. The market's going up. I'm only looking for rules to be met for long trades. This keeps me on the right side of things. This keeps me focused on trading with the large crowd rather than against them. If the background is red, it's going down. I should only be looking for short trades for selling the markets. And once again, guys, if you just stick with the direction, it's going to eliminate a lot of mistakes. It's going to create a lot of advantages. And I want you guys to have that early morning success. You ready? This is the S&P. Are we going up or down? Give me a U or a D, guys. Let's celebrate early. Let's get a victory. The background is red. Absolutely, Josh. That's it. We're only looking for rules to be met for high probability trend trade short. We're not forming opinions about blue lines and fighting. Whoa. Do I only have one chart open? Nope, sorry. That's my untitled one. Let me close this. There we go. Crude oil, guys. Up or down? What do you think? It's that easy. It really is. So you guys are already experts in picking direction. And once we have direction, the only way we can have strong triggers is if the colors of your trigger lines match. If your small triggers, the solid lines, and the large triggers, the dashed lines, they have to be the same color as the background. If they're not, you don't have rule number one met. And that really is a pretty simple visual way to stay on the right side. Strong triggers means, let's take a picture of the picture just for the fun of it. It means that your small triggers have broken above the large triggers. It means that your small triggers, the solid lines, have separated from the large triggers. They've gone above in the direction of the trend. They're wide. And your large triggers are wide and angled in the direction as well. Notice that kind of looks like scissors, open, ready to cut. This is your look for odds favorable momentum, guys. And it is the gap that happens in between. It's the gap between the small and the large that lets me know that the odds are favorable for the market to continue in the direction of the trend, guys. Odds favorable momentum is going to be an annotation that you see on charts all day long. Odds favorable momentum can break key Fibonacci areas. Odds favorable momentum can cover some of the mistakes that new users make, but odds favorable momentum is one of the greatest advantages that you can give yourself because this is a market that's likely to continue in the direction of the trend. The same thing is true going the other direction. When the smalls break away from the large are wide, they're angled in the direction of the trend, guys. It's the gap between the two that lets me know that the odds are favorable for the market to continue down. This is your first advantage, guys. This is the advantage of momentum. This is strong trigger lines. And when you have strong trigger lines, it is the most favorable look for buying Fibonacci support on a smaller, faster chart, or for selling Fibonacci resistance on that smaller, faster chart. You'll use that refinement chart, but on the large chart, you can study it. When there's a tail, when there's odds favorable momentum, guys, this wick at the bottom, that's your retracement on the smaller chart. That's your entry rules being met, and you're going to be able to pinpoint where the bottom of that tail is most likely to form, where the top of that tail is most likely to form. So we'll actually go back and circle these tails and see if we have rules met trades. But odds favorable momentum, let's see if there's a lesson. Smalls above the large are wide. They're angled in the direction of the trend, guys. That's a good look until the smalls come down, and look how fast it happened. We begin to lose that momentum. But here, strong triggers, there's a tail. 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 We're going to go back and circle these, and we're going to see if we had some rules met trades. And this is how you're going to study. You're going to go back and look for that momentum, that first advantage. If you see a tail, circle it. And we're going to show you how that comes to play once we talk about those entry rules. Is everybody okay with strong triggers? Separation between the small and the large, wide angled in the direction of the trend. This lets you know that the odds are favorable for the market to continue in the direction of the trend. If these are strong, when the scissors close, when the small triggers return into the large, see the life cycle? Acceleration, great momentum, deceleration, returning back. When they work their way inside, guys, this is weakened triggers. Anything can happen up or down. It is a roll of the dice. It's a spin of the wheel. You no longer have the advantage of momentum. If you don't have the advantage of momentum, it's no longer a high probability scenario, which means that you can have a high probability trend trade, which means that that won't be a trade that typically wins 70 to 80% of the time. And what you'll see very often is that these weak triggers precede reversals. They precede deeper retracements, bigger bounces, and a lot of times it happens right at key areas. So let's go back to the S&P again. And I want you to see this. The trigger lines return right at a key Fibonacci area. There's your reversal. Strong triggers break areas. We said that it could happen. Sure enough, it did. Weak triggers, there's your push back to the upside. Smalls begin to return right at a key area. There's your bounce. Weak triggers, there's your reversal, guys. build trust in the idea that strong triggers break things. Strong triggers keep a market moving in the direction of the trend. There it is again, smalls above the large. Look at the force pushing, and off it goes to the upside. Freaking amazing. Each and every day, guys, we're just trading the patterns. So that's rule one. Rule one doesn't happen all day. Rule one will give you odds favorable. It'll give you anything can happen. It'll give you odds favorable. It'll give you anything to happen. We're going to look for our advantages when the momentum is the strongest. And then we get into that situation where the small and the large don't agree, where the triggers don't agree with the background, guys. This is a transition. This is where the people that control the market, this is where the buyers and sellers are fighting. This is where, it is gloves off, ballroom brawl, going after it. Both sides have money and both sides have intent. We don't have to get caught in these fights, guys. When your triggers don't agree with one another in the background, it's a transition phase. Let the fight happen. We're better than having to guess or wish or predict what the market's going to do. We can sit on our hands. Let them fight it out. Just be that side stander, right? You got ringside seats to the Tyson fight. Eventually, someone's going to get their ear bit off. Somebody's going to get odds favorable momentum. They're going to take control, and you guys will begin looking for advantages again. So this picture just kind of reminds you, anything can happen, typically precedes a reversal, especially when it's in areas. Odds favorable likes to push and stay out of the fight, guys. That's rule number one. That's strong triggers, the advantage of momentum. And the advantage of momentum can carry you to the next area. It can break those areas. It can cover mistakes that you may have made. Are there any questions about odds favorable momentum? Any questions about strong trigger lines? Whether it's the recognition, what it means to you? Everybody's pretty good on that one. That's typically the easiest lesson, guys. That's the one, if you just love on it and you say, I'm sorry to hear that, C-Dub. So show me a picture. Write your rules on there. Let's see what happened. Got you too? All right. We'll come talk about it. We're going to go through the rules. We're going to get you guys in the second hour. Rule number 2 says termination conditions false. Room to the profit target. Termination conditions. What is a termination condition, guys? It's nothing more than a Fibonacci-based indicator that may reverse the market. It could be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots. It can also be a cyan divergence low or a magenta divergence high. I'm going to give you guys this picture today because it talks about divergence lines. They're not termination conditions until the recipe is meet, but they're very, very solid lines in the sand. And termination conditions have the power to stop the market in its tracks. And it's a 2-step process to understand whether or not a termination condition has been reached, whether or not you've reached an area that has the potential to stop the market. And it all begins with price reaching the area. In order to determine whether or not the market has reached a termination condition, you have to look at the price bars. And if they come down and they reach Fibonacci support, in this case, you've reached an area in the market where decisions are going to be made. You've reached an area where the buyers may try to take over, where the sellers may push harder, where the buyers and sellers might push equally and start to really mess one another up and create this indifference, this untradeable bounce. Or you just don't know. You don't know what's going to happen. But when price reaches the area, what it does is it creates this catalyst for decision making. The only thing you have to do, if price reaches an area and it's a low, if it's support, ask yourself, where are the trigger lines? If they are above the areas of support, whether it is, and let's look at all the different options. Whoops, wrong direction. Whether it is yellow 1-to-1s, whether it is Fibonacci support, or whether it is one of those divergence lows. If price reaches an area and the trigger lines remain above, you've reached an area that may stop the market, that may create a bounce, that may even fully reverse the market. And your best course of action is to do nothing, to sit on your hands, to wait. Is it going to break? Is it going to roll? Is it going to create an untradeable bounce? And the recipe doesn't change when you get to a high. the first thing that has to happen is price must reach the area. Those dynamic Renko bars get to the area, whether it is a divergence high, resistance, yellow 1-to-1s. All you have to do is ask yourself, where are my trigger lines? And if the trigger lines remain below the area that's been reached, you've reached a termination condition. Guys, no more long trades into the area. Wait for the reaction. Is everybody cool with that very simple recipe? And let's go to the live market. Price reaches Fibonacci resistance here. Can't really break it, and look at the push down. You can see how it bounces off of Fibonacci support. Ooh, the dreaded 50-50, not from a good bottom. E. Webster. C-Dub, we're going to talk about it, guys, without a doubt. But termination conditions can stop the market cold. And there's a very basic recipe for identifying price reaches. Where are the triggers? Triggers remain below resistance. The area is not broken. The path isn't clear. So we've identified when we can't trade into an area, when we can't go short into support, right? When we don't want to go short into a divergence low because the trigger lines remain above, even when we don't want to go long into resistance because the triggers remain below and it bounces all the way back to support and the triggers remain above. And guys, 90% of your day is waiting for advantages, and the market will bounce in between areas. Understanding where the market is likely to stop makes it easier to understand when the area is broken, when the path is now clear. And an area isn't considered broken. The path will never be considered clear until both the small and the large triggers get to the other side of the area. So once the small and the large get above resistance, resistance begins to act as support. The path is clear. We're looking for rules to be met. We're looking for odds favorable momentum. We're looking for that clear path, and you'll notice that there's one of those tails. And if I go back to crude oil, my large triggers never made it through the area. Give me a Y if you guys see that. In C-Dub and E. Webster, this has a lot to do with why things didn't work out here. We never had a clear path. You had amazing momentum, but no clear path. And not only did you not have a clear path on 72.83, but 72.86 wasn't broken as well. You had both 1-to-1s as well as Fibonacci resistance. Even though it turned blue, the triggers never got above. So that's a great lesson there about when the area is cleared. So I'm going to give you guys this picture as well. Brand new users, this is your Bible. It's either broken or it's not. It's either clear or it isn't. And then this is going to take you to the next level. This is going to take you to the medium probability. This is the one that gets you to where you can understand when areas have the potential to break. That's what the center picture is. On the left side, price reaches Fibonacci resistance and all the triggers remain below. You guys know, let's sit on our hands, let's do nothing. And then the small triggers smash through. And I mean smash through, not just peek their little heads over the top. And they smash through with odds favorable momentum. So it's imperative that you picked up something on rule number 1 to be able to recognize this look. Odds favorable momentum, 50% of my trigger lines, the small triggers, have gotten above the area of resistance. 50% of the trigger lines, the large triggers, have remained below. Guys, this is what we call a 50-50 trade. And the look has nothing to do with your chances of success. The look has everything to do with the location of the triggers. This area has the potential to break because of the momentum. Strong triggers can break areas, but it's not a clear path. And if it's not a clear path, rule number 2 isn't met. And if rule number 2 isn't met, it can't be a high probability trend trade. So when you have this area with the potential to break, what you're going to find is that there are some key concepts to make it a little more advantageous. Never giving up momentum is the beginning of it, right? Because it takes momentum to break areas. And then you're going to talk about your entry area, and you're going to make sure that it's perfect and it's concise and it has the least amount of risk, because you're really trading a potential trade, not a high probability trade. Is everybody on board so far? In the beginning, let it be broken, let it not be broken. As you grow with the software, what you may find, is that you're willing to take this 50-50 trade. I'm going to give you a great plan for it, but a 50-50 trade is just that. 50% above and 50% below. It's not a clear path, and it has zero obligations to break those areas even with the momentum. And I'm just curious. It's a good looking setup. Just didn't work. If you took this trade, I hope you didn't lose more than a couple ticks. We'll look at it. We're going to look at y'all's charts when I come back. But guys, that's rule number 2. Using areas and trigger location. Price reaches Fibonacci resistance. No triggers break. No long trades. Sit on your hands. Wait for the reaction. It pushes all the way down to support. The large triggers don't follow. They all remain above support. I'm in that 90%, right? I can't go long. I can't go short. And then they come back to resistance. And you'll notice that the triggers are weaker. They're still below the areas. 3 areas, in fact. 2 resistance, 1 divergence high. And guys, this reverses the market, creates odds favorable, gives me that push to the bottom. There's my odds favorable. I haven't reached the next area. My path is clear. And there's my tail. And guys, this pattern right here repeated itself. Let me go to crude oil. I want you guys to see this and why it's so important to study where you've been to have an idea of where you're going. Let me scroll back, because yesterday it was uncanny how many times it happened. Resistance to support to resistance, push lower. Resistance to support to resistance, push lower. And I want to say there was another instance where it happened. But this is a pattern that repeats itself. The market just goes up and down. Resistance to support to resistance, pivot, stop out, and it pushes lower. That is the exact same pattern over the last 24 hours in crude oil that was inserted into the user guide from 2021. We're trading patterns, guys. Start the recognition of patterns, become a chart reader, and that's what's going to turn you into an amazing trader. One more picture, my favorite picture. And this one really illustrates how we're not in control. How the market is nothing more than a fight between buyers and sellers. And sometimes the buyers win and sometimes the sellers win. And in this case, the sellers were certainly winning all the way down to those yellow 1-to-1s. The odds favorable momentum smashed right through support. But when they reached the yellow 1-to-1s and the triggers remained above, you guys said, hey, no more shorts. I can't go short into yellow 1-to-1s with all those triggers above. It may create a bounce. There may be a fight. It might reverse the market. And guys, the bounce comes first. The buyers shove hard. And they push the market all the way back up into that Fibonacci resistance that used to be support. And the sellers were waiting. And they said, well, all the triggers are below resistance. What do you say we go ahead and push it down again? And the buyer said, yeah, but I've got all the triggers above support and your triggers don't match. I'm going to give it a shove. And the two forces really just fight it out for about 25 minutes. For about 25 minutes, buyers and sellers can't agree who's going to take over. This is your 90%, guys. This is where you sit on your hands and do nothing. It costs nothing to not be in a position. And I want you to see what happens when they're done, when the fight's over. Small and large got above resistance. It's now behaving as support. The area is broken. The path is clear. Your small triggers are outside of the large triggers. There's momentum there. And look at the circle, guys. That is your entry. That's where you guys are going to be able to pinpoint exactly where the market is most likely to continue. And that circle represents the 10% that is day trading. The 10% of never missing all of the advantages put together for the high probability trend trade, because that's the trade that typically wins 70 to 80% of the time. That's the trade that creates confidence, guys, through the memory of success. And what you have to do is you have to be so in tune with what you're looking for. You're taking pictures, asking for help, that you learn how to stay out of this 90%, that you learn how to say, I don't need every trade. I just need the best trades. Maybe I'll add a couple contracts. And guys, those are termination conditions. Scroll back on your chart, right? Circle them. Take pictures. Because what you'll find is that in just one picture, this was crude oil, right? And I'm going to use my stamp tool. That was a termination condition. And that was, and that was, and that was, and that was, and that was. Isn't that amazing? One picture, there's 6 pictures of termination conditions. But there's also pictures of clear paths, right? And there's pictures of clear paths and tails. Whoops, wrong one. And these are where you guys are going to get paid. You're going to get paid on the easy ones, in between the areas, in between the termination conditions with the odds favorable momentum. Get in the habit of scrolling back. Get in the habit of using historical study to understand the patterns, to know where they're at, and then post them in the room and ask yourself, or ask for help. So that's terminations, guys. Just a couple options there. There's also one more that I want to talk about. Large chart defined the areas, right? Large chart defined the lines on the chart that may stop the market, that may create a fight, the areas that may impede forward progress. Large chart also told you which direction to go. It told you whether you should be looking for shorts or longs, and it defined your momentum. And all of this happens on that large chart, 1 bar. Sometimes the large chart is deceiving. Sometimes the large chart has odds favorable momentum to the upside. The path is clear and the market just goes down, right? Or maybe it's the same to the downside and it just goes up. Absolutely, Webster. We'll look at all of them. I'm going to do one more termination and then I'm going to go through your pictures. And guys, what he just did, always ask. If you have to leave, I'll look at your charts. There's one termination condition that happens on a small chart that doesn't use lines, and it uses divergence, the loss of momentum. 3 divergences from a low, 3 divergences from a high may terminate the trend. It becomes more powerful. When the small triggers or anything can happen, it becomes more powerful when it creates a head and shoulders. The third pivot's higher than the previous or lower than the previous. Guys, you're going to see this look at a low or this look at a high when the large chart can't show you change happening. You can also use those 3 divergences to help you manage out of the trade when things are changing. So the only termination condition that I will look at on a small chart is going to be 3 divergences in the same location. So we've got a pretty good understanding of large chart, momentum, large chart, clear path. E. Webster, we're going to go through your pictures real quick and we're going to see what we have. First trade, 50-50, right? 50-50 trade has the potential to break, but it hasn't broken yet. This is a trade that uses momentum to help establish whether or not that market is likely to go up. With strong triggers and no divergence, you took a beautiful entry. You're able to manage out for quick profits. And then divergence says that you're losing momentum. So now you don't have the clear path. Now you're losing that momentum. And sure enough, it pushes lower. You get out, break even. I like it. Great pragmatic management on that one, E. Webster. And then maybe as you grow a little bit, I don't know if this is coming from a good top or bottom, but you may have the opportunity to say, well, this divergence can push it lower. Maybe I'll take a second entry. I love everything about it. And guys, that's a very pragmatic, easy $100 and absolutely no loss on it. You're making money, and that's the goal. And then this one's even easier, right? Odds favorable, clear path, circle the tail. And we're going to talk about this entry because this entry comes right from the bottom of the tail, guys. And I think that we circled this one this morning. And E. Webster, the perfect entry. And then you chickened out. And E. Webster, was it running out of steam? Or did you just see a small chart fluctuation? Let's go through momentum. You have the absolute best look for momentum, right? Small's outside of the large, large or wide, everything's angled. The path is clear, beautiful. Here you have synthetics up, you have large up, you have smalls outside of the large, and that's exactly what happened is you saw a fluctuation on a smaller, faster chart, and you got the hell out of that trade. And that's okay. You made great money, dude. Beautiful trade. Awesome. And then the goal for everybody is to remember that the large chart does lead the way. When the large chart has this momentum, when the path is clear, the market's likely to push up. This small chart is going to be deceptive because it's the fluctuations that get you in, right? We need those fluctuations to get in. What did that look like after the fact? 79.20. I believe that was this one right here, and it went straight to the fib, didn't it? So guys, there's that large chart trust. There's the after, and then when you got to the fib, that's when you knew to get out. Beautiful trade though, E. I mean, perfect. I could teach a class on this one, so much so that I'm going to take your picture and I'm going to open up my spreadsheet and I'm going to drop you into the Hall of Fame because that is about as good as it gets, guys. Steal his picture. Put it into your spreadsheet on what it should take to get you in. I want to come back and study that one. I want to make sure that I can do exactly what you did because you had every advantage. And then here, anything can happen triggers, coupled with even more divergence, right? Losing it. And then E. Webster, the lesson for you on this one, more than anything, is you sacrificed momentum. And you knew that, right? But you had a clear path. So your large charts, it's half. One is good, one is not. So let the small chart be a tiebreaker. You don't have strength on the small chart, divergence, weak triggers. But this for me is one of the biggest ones, is when the areas start falling outside. And you still had one in there, but when my areas start getting to the wrong side of that little correction zone, and when we talk about entry rules, it'll make a little more sense. This is tough because the reality is I don't know if these losses of momentum are going to pull me back to this fib or these one-to-ones in mid-band or this fib, or is it going to come back to the mid-band? So I kind of rely on these patterns. And let me show you the picture that I took yesterday. I take a lot of pictures, so hopefully I can find this one. And this is a pattern that repeats itself a lot, is when divergence prints on your large chart, the mid-band typically becomes the first target. And I can't for the life of me see the picture in here. They're all too small. But when divergence prints on your large chart, what you find is very often it'll push back to that mid-band, and that mid-band becomes your first target. And I have no idea where that picture went. But as soon as I see this, and you don't see it till down here, mid-band becomes the right. So you can start looking for a little more long after that, but a little bit of patience in the middle. I think it's a pretty good look, but without the advantage of momentum, it just pushed lower. And then finally, let's see, you do have strong triggers. You're coming from a termination. You didn't reach the area, and it pulls right back to the large triggers, right to one-to-ones inside of favorable large triggers, and it goes right to the area. Where did you put your entry, E. Webster? At support? Can you guys hear me? Did you put it down here at support? Because that's a pretty normal thing. Yeah. Near the blue fib. So E, we're going to do one quick, and guys, we're about to get into entries. And we're going to talk very much about the window of opportunity. And the window of opportunity, has nothing to do with the call-out feature. You're going to look at your trigger lines, right? And you've got a little split on them, E. But if you build that window, it goes from the highest point to the lowest point. And conservative is one thing. Isn't it more conservative to get into the trade with all the advantages? Because of the big gap. So you were expecting it to close to the large triggers, right? You're expecting price to probably come back and close that gap. I want to make sure that I'm thinking the way you're thinking here. Is when you looked at the large chart, you said, man, this is the gap theory. It may close the gap. And I agree 100%. And it did, didn't it? And that's it. That is the large triggers. The LC, I don't know what the C means. Large chart triggers. Why the bottom? Did you make that rule up? Kind of. So it's okay, dude. This is the awesome part about this class, I think. So let's look at a couple different factors. Coming from the fib that didn't break. But look at the momentum that you have. The momentum is strong, strong, strong. That's great momentum. Huge gap. And it's not bouncing off of anything. But you know that it's going to close the gap. That's the gap theory. We'll talk about this later today. So E. Webster, when I'm talking gap theory with that much momentum, it may just tap right off the top. And to be honest with you, is it may tap these triggers almost like playing Missile Command, where you lead the passer and they come up and they catch it. That's your entry right there. That's the one. That closes the gap to the triggers. You see it a little more clearly on the small chart. And you've got those yellow 1-to-1s right there to create a bounce. So it's kind of a double whammy. You've got the good termination. You've got the best momentum. You get the pull back to the triggers. And you've got an awesome bounce spot that still keeps you pretty low on the risk scale there. Does that make sense? And for the rest of you that are still learning the software, what you're going to find, we're going to talk about the windows of opportunity, and we're going to talk about the reasons that we get in at the top. And one of the other reasons, E. Webster, that I'm looking for the top is notice that there's no divergence here. Like there's no divergence, and these triggers are just nuclear strong. I love the top of the window on that one. Great pictures, man. Really good pictures. And then you had one more. You still have time? And there's the 50-50 trade. So guys, I'm going to give you a plan today that talks about taking this 50-50 trade. And one of the most important factors is that you're coming from a termination that creates a full reversal. So E. Webster, what you got caught on here is this is a bad bottom, just like you described. It's not coming from a decision-making point. And when I have a bad bottom and it's not coming from a decision-making point, this mid-band can cause a bounce, right? A 50-50 trade is less likely to work, even with a great look over here. So a bad bottom for me is a huge opportunity to be able to say, man, you know what? It's just not the best look. I'm not coming from decision. It may continue down. And the same thing happened. I think we had a picture in here. Well, this is it right here. This was a bad top, right? Everything was going up, and it pushed right back to that mid-band, and that's where it continued up, I believe. So that bad top, bad bottom gives you a little safety factor on those less than desirable trades. So great pictures today, man. Thank you for posting. Guys, if you're still working on entries, some of that may not have been completely clear to you. For those of you that are in tune with your entries, I hope that was helpful. I hope so. Have a great afternoon. Stay warm out there. But so far we've talked about odds favorable momentum, and we've talked about clear path, and we had a little digression there, and that's okay. Let's talk about the entries, and then what this is going to do is this is going to help you a little bit to understand why getting in at the right spot is always the best bet. So the entry area, rule number 3, smaller, faster chart, refinement chart, taking one bar and breaking it into like 15, 20, 30 bars. Rule number 3 says that you're going to be able to, oops, sorry, I think I just connected my headphones to my phone. There we go. Let's see if we can get back. Do I sound okay? Or do I sound like I'm in a bucket? I need to make sure. More devices, Bluetooth, headphones. Let me connect. Bucket. There we go. Is that better, Ron? I saw my phone connect. I don't know why it did. Cool. Rule number 3 says you're going to be able to use a limit order to buy or sell a pullback at an area. You're going to literally wait for the market to come to you, and you're going to wait for it at a line. And guys, the lines on the small chart are used for entry. as opposed to the lines on the large chart that are used to tell us when we shouldn't be entering. And we're going to use a limit order. We're going to buy or sell a little retracement. We're going to let the small crowd fight and give us that little retracement, that little pushback against everything that's going up. And we're going to wait for it with a limit order at an area, fibs, mid bands, yellow 1-to-1s, but we want them to be inside what we call favorable large triggers. And favorable large triggers simply mean that your large triggers, the same ones used for momentum, the smooth dashed lines, and your synthetic triggers on the smaller, faster chart, which are the stepped dashed lines. And those are nothing more than the large triggers from your large chart. But when they are one on top of the other, when they are wide and angled in the direction of the trend, it creates the ability for you to have the smallest window of opportunity possible. And your window of opportunity is where the market is likely to continue. So the smaller you can make that window, the less amount of risk you're going to have on your trade. And that's a wonderful thing because one of the great things about the methodology with Nexgen is that you literally manage your risk before you ever manage your profits. You manage your risk through going with the direction. You manage your risk through having momentum, through having a clear path. And now you're going to manage your risk by being able to have the tightest point of entry. And guys, the areas inside of favorable large triggers, that's the bottom of the tails, the tops of the tails on the large chart. We're just trading that little retracement on the smaller, faster chart. So I'm going to go through the process, guys. The spreadsheet, we did one yesterday too. I'm going to go through a long, maybe a short. Let me scroll up to the top. But in the upper left-hand corner here, if you guys are new to Nexgen or you just want the upgraded version, there it is. But let's talk about getting into the market. And everything starts on the large chart. The large chart has to say up, right? The large chart has to have strong triggers, and the large chart needs to not reach an area so that the path is clear. And we've done all this, and we also have a strong bottom. This is a termination, whoops, that creates a full reversal. And this is the best of the best look on the large chart. So now it's time to look for an entry. My rules are met. And look at my small chart. Small chart is going up. Small chart has strong triggers. Large synthetics are wide. I have those favorable large triggers. All I'm doing right now is looking at my triggers and I'm looking to see what areas are going to fall within. Fibs, mid bands, yellow 1-to-1s. But there's nothing for me to do yet, guys. Everything says up. Small chart reached a fib, but that's no worries because areas are defined on the large chart. I have to let that small crowd do their thing. I have to let those yahoos fighting direction, momentum, and everything fight. And they start the fight with a reversal bar. And this reversal bar signals the beginning of a pullback. That little retracement, counter to everything. Done on the large chart. Looking for this one. Guys, some of you are going to get scared by lines on the small chart. I'm thankful for them because it gives it a place to bounce back to my entry. So when the reversal bar prints, it signals the beginning of the pullback. Once it prints, I'm going to look at my trigger lines. I'm going to look at the top line to the bottom line. Large synthetic. They might be flip-flopped. They might be tighter on top of one another. They might be spread out. The tighter they are, the smaller my window. So I'm looking from the top line of the triggers to the bottom line of the triggers, and it's inside of this area that I'm looking for my areas to trade. Inside of this range is where I'm looking for fibs, mid bands, yellow 1-to-1s. And those are what are going to create my window of opportunity, my woo, if you will. And the woo, nope, not yet, Dwight. Always after rules. Always after rules. My window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. So the mid band is inside of favorable large triggers. That actually is the top of my window. That's the point where the market is most likely to continue, down to the yellow 1-to-1s, which are also inside of those favorable large triggers. From 1-to-1s to mid-band, from mid-band to 1-to-1, this black box represents where the market is most likely to continue. Guys, this is your window of opportunity. This is where the trade is most likely to happen. Remember that we took this look because of odds favorable momentum, because of nothing in the way to create a bounce. And because of that, you're going to activate a limit order. Whoops. Ah, where'd my picture go? Dag nabbit. Let me go find it real quick. We were doing so great. You're going to activate a limit order. I've got it in here. We did it yesterday. Right at the top of the window. And you're activating at the top of the window because the large chart had odds favorable momentum. Because the large chart had a clear path, absolutely nothing in the way. And because the large chart said that it was time to look for that entry. So right above the midband, which is the top of the window of opportunity, because of all the strength and clear path on the large chart, this is where you're going to activate your limit order. Right there, because with all that strength, we're not expecting them to push that much further below. We're not expecting them to make it all the way down here. So we're going to catch them at the top. And this becomes your entry for the highest probability trend trade. And guys, the entry that I just went over is right here in the spreadsheet. And I dropped the spreadsheet into the room for you. And you can use this sequence. You can use these tails on the large chart. We're going to use this one right here. If I circle that tail with the rules met, and I know this one worked because you guys have posted the winner in the room, let's go through it. Let's go through the whole process together. And let's focus on entries, guys. Was it a long trade, Mark? I don't know. Let's see if the rules are met. Large chart says up, right? Large chart has strong triggers. Large chart's coming from a termination that created a full reversal. Small chart is screaming to the upside, and I have to wait for a reversal bar. At the time of the reversal bar, I'm looking from the top of my triggers to the bottom of my triggers, from the highest point of support to the lowest point of support, which means that this is my window of opportunity. This is the point where the market is most likely to bounce, where it's most likely to continue. My job is to activate a limit order at the top of that box, just above Fibonacci support. And if the trading gods are favorable that day, it hits my area and off it goes to the races. And look at where the circle happens, right at the bottom of the tail. So guys, go back and study this. When you have tails and odds favorable, and you're coming from terminations, the first one pulls right back to resistance inside of favorable large triggers. The second one pulls back to favorable large triggers, areas of resistance inside of favorable large triggers, and the momentum keeps pushing it down. Excuse me. Guys, this is the new user. This is how you get to where you want to be. This is how you learn to read your charts. This is how you learn to recognize advantages, to begin speaking in terms of advantages. And it all goes back to simplicity, right? Three rules: momentum, a clear path, and an entry area. Let it happen on only two charts. Let the large chart lead the way. Let the big crowd tell you what to do. Let the small crowd get you back to your entry, guys. Are there any questions about the high probability trend trade? Is there anything that I can clear up regarding momentum, termination conditions, areas for entry? The idea is that none of this is hard, right? None of this is difficult. None of this is gonna kill your brain, but you do have to study it. You do have to learn these looks, and that really is the path, guys, is learning the looks so that they become easy. Taking pictures and annotating charts so that it becomes easy. Getting to the point to where you look at your chart and at a moment's notice, let's open up a new chart. The trend is up. I'm coming from a termination. The momentum is great, but I reach resistance and not one of my trigger lines broke through. Therefore, I don't have a clear path. And I have to sit on my hands and wait for a minute and see what happens and look at the push down. And it may not kill the trend, but it certainly killed the trade in the moment. That's how quickly your analysis will happen with a little bit of study. So I'm going to give you some goodies. The first one is the high probability trend trade checklist, guys. Um, use this. Print it out. Put it on your desktop. Every time you take a trade, compare it to the rules. Make sure that you understand. If you're looking at one of these rules, very much so, right, Don? And it's okay. Don, do you know what my biggest challenge was when I started with the software? Is trading in determination conditions. Is seeing the momentum in a seemingly good entry spot and forgetting that I needed a clear path. And that was my biggest challenge. So I focused my study on termination conditions. And every time before I took a trade, I literally would ask myself, did price reach an area? Did the triggers break? And it fixed me. So trading in determination conditions is common, but it's very fixable. Everything is fixable, guys. This trend trade checklist is designed to keep you focused on the best of the best, to keep you focused on the entry for the highest probability trend trade. Use it when you're getting in. Use it when you're annotating charts, guys. Write these rules out on your chart because you're creating recognition through repetition. For you visual learners, it's the exact same thing. Here's your termination that creates a full reversal. Odds favorable, anything can happen. Visually, you want to be able to associate a clear path, a termination, potential to break, and you want to be able to recognize it in the moment. So use these still pictures and compare them to the pictures of your trades. And then also the window of opportunity, those areas where the market is likely to bounce. So both of these are available to you. I just dropped them in the room. Download them, put them in your spreadsheet, whatever you need to do. Um, Write those rules on your chart, guys. It'll make life easier for you. And then finally, I'm going to give you the KISS plan, the Keep It Simple Sunshine plan, the plan that is designed to optimize your chances of success with the high probability trend trade and the 50-50 trade. Guys, this is not the end of the road for any of you. And I always feel like I have to say that because people get distraught. They're like, but Mark, I want more trades. But Mark, I want to be more active. Mark, I really need to be in the market all the time to make any money. And I'm not going to lie to you guys. That's utter crap. You don't. You need to be in the market at the right times. You need to be in the market with the right advantages, and you need to manage your amazing entries. That's how money is made. Money isn't made because you want it to be made, because you wish it would be made, because you hope it gets made. Money is made as a result of the process. So it's imperative that you learn the process, but this is a stepping stone in your learning journey. And it will optimize your chances of success, guys. And if I go back to the 50-50 trades that were posted earlier, you'll notice that they broke this very simple plan. The rules weren't met based on the best chance of success on a 50-50 trade. Your simulation, your study, your class feedback, your continuous practice, guys, you're going to build your own plan. You're going to build a plan that works for you. And the cool thing is when people post trades outside of the high probability trend trade in here, they're going to annotate their charts as well. They're going to talk about what they did and why they did it. And you're really going to be able to grow not only from me and your feedback, but also from the other people that are posting that are asking questions. You'll create a plan that suits you, but it's going to be based on your ability to read the indicators. If you don't see momentum as clearly as you shouldn't take a momentum trade, right? And if you have trouble recognizing termination conditions, then an HVA trade maybe isn't your trade. So get good at the simple one first and then expand. In your simple plan for consistency, guys, don't fight the large chart direction or triggers. It really is. It's a recipe for disaster. And if you can just stick to that, if you can say, I'm never going to fight the large chart direction, I'm never going to fight the triggers, you're going to eliminate about 70% of the problems that most new users have. This is a very tongue-in-cheek, How to Commit Financial Suicide by John Novak. And this is based off of teaching people to be day traders for 20 years. Trading against strong triggers is chapter 1. Chapter 2, trading into termination conditions. And I know it's funny, haha, look at this. But guys, this is very real. And this silly book was written for a reason because these are the most common mistakes that new users make. You know that now. You can avoid it. Um, Focus on your entries, guys. Give yourself 20 days, 30 days to get good at entries. Give yourself a month, 2 months to get great at entries, to recognizing advantages. Um, Making your money as a day trader is not a sprint. You're not going to make it all in a week. You're not going to fund your accounts in 2 days. You're not going to get a Lamborghini by the end of the first month, right? You've got to embrace the process. Give yourself time. Give yourself a little bit of grace. You are new. But if you focus on entries, great entries create manageable trades. Great entries create the opportunity for success that poor entries don't provide. No Lambo? No, not in the first month. I'll tell you what, Sergio, I don't know if you've driven Lambos, but they are the most uncomfortable hunks of metal. John had a really nice Gallardo, I don't know how you say it, I'm not Italian. It was like driving a go-kart, but it was so uncomfortable. A lot of fun, but uncomfortable. Once you get into the once you get into the market, guys, once you get into it, you've got to do something with it. Entries are the first piece of the puzzle. Great entries create manageable trades. I can't stress that enough. And your entries come to be because the large chart said that it was time to look for an entry, because the large chart had every advantage. Um, had a Diablo, the coolest looking piece of junk you ever had. And that's what it is. They're art, right? John told me when he bought his Lamborghini, he goes, "There's no reason on God's green earth to own one of these except that you can." He goes, and that's the only reason to have one. It was kind of funny. Um, Great entries, guys. Rules-based entries, getting in at the area inside of favorable large triggers. This is the first part of your management. Is eliminating the risk of hope, of weak triggers, of trading in determination conditions. And when you get the right entry, your initial stop goes where the market shouldn't, outside of that window of opportunity, 4 or 5 ticks. Because if the market continues up, well, you've lost that third rule advantage. You don't want to be in the trade anymore, guys. And I'm going to tell you right now, you're going to lose trades. Anything that wins 70 to 80% of the time, you have to lose 20 to 30% of the time. It's just a fact of life. It's a normal part of a positive equity curve. It's a cost of doing business, guys. It's paying rent. So if you get stopped out, that's it. Let's wait for the advantages to come back. More often than not, you're going to get a reversal bar. And once you get a reversal bar, you can get you can reduce your risk. You can go above that reversal bar 2 ticks below. Man, Rob, I have a face built for radio, and I'll tell you what, it's going to take more than a Lamborghini. Once I get a reversal bar in the direction of the trade, I'm going to reduce my risk. That's it. And there's nothing to do. At this point, there's nothing to do. I'm either going to get stopped out for a smaller loser, which is great, which is why you can win 50, 40% of your trades and still make money, or with this reversal bar, you've managed your risk and it's going to go off to the first target. And for the brand new user, don't get aggravated with me, new users. For the brand new user, the target's $100. Um, and it's only $100 because it creates confidence instantly. NinjaTrader tells you that you just won. They tell you that your target was hit. It goes into your account. You can't lose it. And then you're going to move your stop to break even, which means that not only did you just get paid, but you also have zero risk on the trade. And this is outstanding because what it does is it keeps you focused on the idea. Where is it at? Keeps you focused on the idea. Oh, I messed it up. That the large chart led the way. It keeps you married to the concept that odds favorable momentum, that a clear path is why you took that entry in the first place. So it makes it easier to hold for the second target. And when you hold for the second target, you have the opportunity to make money. Oh, no problem. Adriana, if you want to DM them to me if you have stuff to do. Or did you post one in the room? If you posted one in the room, I can go to it real quick if you have time. And I think that we talked about this one already, right? That the large chart has to lead the way and the large chart didn't have a clear path yet. So I think we were able to answer this one. Was there another one? Or you can just send it to me privately and I'm happy to respond. No worries at all. So let's go through the rules. Do you have odds favorable momentum? Absolutely. Adriana, do you have a clear path? I'm not sure because you didn't annotate your chart. Price reached Fibonacci resistance and absolutely none of the trigger lines broke through. You broke rule number 2. But you did break rule number 2 with no divergence and a great entry, right? And it's coming from a termination that creates a full reversal. This is a great example of how when you have the best of the best momentum and you have a termination that creates a full reversal, it'll cover some mistakes. Normally, trading into a termination condition is hugely detrimental if the conditions aren't perfect. Adriana, I think you did the same thing yesterday. Because of the termination, because of that level of momentum, because of no divergence and a tiny little bit of risk, you're able to capitalize. The decision was made at the bottom that said the buyers wanted to take over. Does that make sense? And guys, this is huge. When a termination creates a full reversal, these areas are more likely to break. When it's coming not from a termination that creates a full reversal, these areas are less likely to break. So Adriana, you let it be perfect. Your entry is perfect. Your stop is right where it needs to be. And you can identify without a doubt where your first trouble spot is. So when it gets there, you can tighten up and manage well. Does that make sense? And the only question, did you realize that you were trading into a termination condition? And did you make the decision that if it got there and gave you trouble, you might exit? And guys, that's chart reading. Adriana, outstanding work. Being able to identify advantages to the point to where you can break your rules a little bit and still find success. And once you can read your charts and you can string all of these things together, Adriana just gave you a beautiful example of how it can be done. Nicely done. And look at that, down $112. You're going to see red sometimes, guys. It's all right. Trust the charts. Beautiful work, Adriana. Have an amazing afternoon. Thank you for being here. And then the final piece of the management, guys, your break even. Everything says down because the large chart said so. Everything is going in the direction of the trade. You have absolutely nothing to lose. Let it hit the second target. Adriana just showed us all that momentum is a winner, right? All that momentum can break areas. So if you hit the second target, it's a $300 trade. In the beginning, it's small profits, guys, little bites. Getting accustomed to winning, being okay winning, not feeling like the market owes you $1 million every trade, right? And then this $300, if this is all you pull off every day, it's a $72,000 year, and that's not a bad year. Especially your first 3 to 6 months into being a trader, being a chart reader. So this KISS plan is designed to keep you focused on the best entry. The KISS plan is designed to keep you focused on getting paid, getting money into the account, exiting the position, and waiting for the next one. And here we go. There's that magic phrase again. You will craft a plan tailored to your personal goals based on your ability to read the charts. So the better you get at reading charts, the easier it's going to be to hold for bigger moves. The easier it's going to be to look at your chart and say, man, with all of this momentum and a clear path, there's an opportunity for me to make more money, right? With all of my rules met on this chart, there's no reason for me to exit a trade because the rules are still met. And with odds favorable and a clear path, I can start to really turn those $300 trades into $600, $700 trades. And that's the goal, guys. Just get to where you want to be, but give yourself a little time to get there. You will. You will get there, and I'm going to be with you every step of the way because that's kind of my thing. That's what I do. So here's the KISS trading plan. I'm going to drop it in the room right now. And then I'm also going to give you guys today, because a lot of you guys want to build your own plans, right? Here's the exact same template for the KISS trading plan, but it's fill in the blanks. Define your entry first. Guys, always define your entry. you should be able to go back and take pictures and prove that it wins more than it loses. And if you can't do that, the trade really has no business being in your plan, right? Why on earth, if you flipped a coin and you knew that it was going to go to heads 75% of the time, why would you ever bet tails? You've got to learn to accept those little bit of losses so that you can capitalize on the wins. So that's in there. The KISS plan's in there. The market went all the way up to resistance. But here with a clear path, and it pulled right back to the area that broke. That's kind of nice. And then crude oil, one, two, three divergences in the same price range, said that that thing may head up a little higher. Um, I'm going to take 5 minutes, guys. I'm going to stretch my legs. When I come back, we're going to look at the charts that you guys posted. I'm going to answer the questions that you guys may have. Great first run. Thank you for the questions, for the posts. I'll be back in about 5, and we will continue. All right, ladies and gentlemen, here we go, second hour. Just for you guys that haven't been here before, I do have to scroll to the top of the chat box, so it means that when I'm clicking on pictures, sometimes I can't see the questions. I'm gonna try and go back and forth as much as I can. We already covered all of E. Webster's and then live edge trading. Guys, one chart, NASDAQ. It's a 55.8. It's a time frame that is 4 time frames higher than what you're accustomed to. This is a gentleman that has had our software for approximately 11 years now. Um, and all he's doing is chart reading. And I kept this one in here. I want you guys to see it. All he's doing is chart reading. He's talking about what he sees, why he sees it. He's making decisions based on his ability to read charts. It's just a high time frame, long trade, taking advantage of the exact same patterns on a different time frame, giving him the opportunity to just hold for bigger moves. I like to post this stuff sometimes because it just kind of shows you where you can be heading. And then Cav, are you with me? I want to make sure that you're back. One day, Cav, you're not going to give me these giant charts, but that's okay. Um, not mad at you. And this is the one that we looked at this morning, right? This is the one that we circled in the morning. Large chart came from a termination, created odds favorable, gave you a clear path. Nice restraint. I know that you held off on the 50-50 because of the divergences, and then you were ready to pounce when it came and gave you your entry. Nicely done, Cav. Great patience. I know you're working on some of that, and that is outstanding. This one wasn't perfect. You chose not to take it, and they said, "Man, Cav's following rules. Let's give him the trade." Really well done. And then after Cav, we have Don Sanchez. And I think we talked about this one, right, Don? So, what do you think? Now that we've gone through rules and talked about advantages, what do you think? Good scenario for a long trade? Is that your best look to risk your money on? As you build a plan, you'll be able to answer that. This one doesn't have rule 3 or 2 in place. Doesn't mean it's not a trade. You have to ask yourself if it's your trade. And then Cav. Got another one. Let's see what you did, my friend. Cav says, with that much momentum and the smalls breaking through, I think that the key to this one is look at that. There's no divergence. And Cav, what a win, right? No divergence on the trade. You say, I'll take a shot. And all of that momentum gets you back to retest the low. Beautiful job. Really nice trading there. Really nice trading there. And then live edge. Well, guys, there is money to be made. $55,000 morning is not a bad morning. Notice it was 100 trades to get there, trading bigger lots, 70% winners. Once you learn how to read your indicator, guys, sky's the limit. Sky's the limit. Don't try to be there in your first day. JW. JW outstanding. Odds favorable, clear path, pull back to resistance, and that one made it. Both targets hit. Exact same trade as Cav. And guys, I get excited when I see this. When I see you guys taking the same trades. When I see two people post the exact same setup, the exact same entry, the exact same targets, what it means is that you're learning to read your charts, that you're getting good at reading your charts, that, and more than anything, it means that you're beginning to trust the methodology, that you have faith in the idea that strong triggers and a clear path is the recipe. And so often you'll be tempted to fight the recipe, and the hardest thing that you'll ever do is absolutely nothing. True story. Hardest thing you'll ever do is absolutely nothing. Outstanding trade, JW. That's a great way to trade or to start the day. The market gods were good to me this morning. My day started two winners. I love it. I hit my goal before we ever started teaching. And they were both momentum and clear path. Always a good thing. All right, Dwight, 50-50. Smalls are through, large are not, no divergence, perfect entry, and you take a couple ticks. So the 13-2 large not fully through. Exactly, but the smalls have smashed with odds favorable, right? And you're coming from a termination, and you have no divergence, and you take the perfect entry. You remind me of me a little bit, Dwight. When I first started, um, I started going live, and I'd get jumpy. And I'm not saying that you're jumpy, but I could nail entries. I would absolutely destroy entries, beautiful entries. And I would take 25 of the best entries that you've ever seen in your life. And when the day was over, I'd be up 20 ticks. Because as good as I was at entries, I literally scared the shit out of myself watching the fluctuations on the small chart. So can we talk management? And this is so normal, and not a lot of people talk about it. Not a lot of people want to talk about the idea that trading can be a little nerve-wracking, that it can be a little scary, that it can be just like, oh my gosh, what am I doing? Whoops, let me because that was such a great setup. I want to make sure that we get the whole setup in the picture. There we go. Because Dwight, your chart reading is second to none on this one. Second to none. It starts with a termination condition that creates a full reversal, right? And that's a strong top. And this right here already gives me confidence about my potential for shorts. And you're patient, man. You wait, you wait, you wait, you wait. And then I get odds favorable momentum. And that makes me feel even better about my shorts. And then you identified it's a 50-50. What does that mean? That means that the path isn't clear. But look at the position of the triggers. The large are almost through. The small have absolutely smashed through. The momentum is the best. This area has the potential to break. Over here, no divergence. Strongest trigger look you're ever going to get. And look at the window of opportunity, brother. Dude, that is nothing. And you nailed your entry, right? And that's the S&P at 9:10 this morning. All right. Let's go to the S&P at 9:10. Because I want to see. Okay, so there was your trade. And I like doing this, and I had to do this myself. I really did to be able to take this one. So there's your 50-50, strong. You take the perfect entry. I just want to see. This one didn't work. But from your entry, 94.50 was the low. 94.50 is where it pivoted to. So that was about the bottom right there. And you were in at 76.50, which means, or 96.75. So at 94.75, that first super conservative target on your 10 lot, that was a $1,000 trade. Does that make sense? The most conservative target on a 50-50, that's a $1,000 trade. You got 250 out of it. 250 is not bad, except that you probably paid $180 in commissions. Is it $18 a round turn on a 10 lot? So it means that you're net 70. And guys, this is why a management plan is so important. Only 40? So you made 210? That's great. I love quick hits. I really do. But eventually there's got to be a level of trust, right? I love that $100 target. I really do. Take half of them off at $50. That's a $250 trade. And I know you're on an Apex account. So all of your trades, when I'm working on management, what I do is I go back and I look and I see what happens. And what happens if I'm super pragmatic and try to take the emotion out? You hit the first target, the most conservative target ever, right? And that's $1,000. Maybe you just commit to, okay, in the beginning, I'm going to try and make 1 point. I'm going to try and make $50 a contract. You double your money. And with this level of chart reading, Dwight, with this level of advantage, it's going to be hard to not catch that. It's going to be hard to not be able to get just $50 per contract. Does that make sense? That's the hardest part. But you and I we're walking the same path, just three years apart. I was notorious for jumping out early. I love your chart read though, dude. You killed it. You are absolutely killing it with your ability to recognize advantages. And your entry is solid. All right, GWC, 50-50 trade from a bad bottom doesn't work. Um, we talked about it with E. Webster. C-Dub, I know you took the same trade. I wish that I could create a neon sign for you guys to put on your walls. And there wasn't even a loss of momentum. The buyers didn't even try to steal momentum. Guys, when it's a 50-50 from a bad bottom, the likelihood, especially with no divergence, this is just your bounce point. Um, Looking down. And if you go back to the KISS plan, and guys, this is one of the reasons why I created the KISS plan, because the 50-50 trade is the most lost trade. It is the most um, taken my money trade out there. And there's a way to take it with the best chance of success. There really is. Hey, Cav, have an awesome one. Did I get all your charts? When you talk about the 50-50, when you talk about those areas not broken, the first thing the KISS plan says is one area not broken. And guys, remember, your ability to read indicators, your ability to recognize things is going to change this plan. But if you're losing more 50-50s than you win, this is a great fallback. You need odds favorable momentum on both charts. That was definitely there. No divergence on the 5-1. That was definitely there. But that good top or bottom. So if I have a good top or bottom, I may omit the one divergence. But no divergence does not outweigh from a good top or bottom, if that makes sense. It's not one or the other. I'm willing to ignore one divergence if I'm coming from a good bottom. But if I'm not coming from a good bottom, you got to convince me. And that just becomes a much lower probability trade. When they make a decision at a key area, it creates more opportunity. Thank you for sharing that. And I think that's a good lesson on 50-50s. And then Josh, let me figure out what you did here. Large chart is out of 21. That's a 21, so that's an even higher time frame. Oh, same one. 50-50 from a bad bottom. I like that all of you guys took it, right? You're focused on the no divergence. As much faith as I put in no divergence, I've got it tenfold in a termination that creates a full reversal. So I think that's today's lesson here. And if you go back and you look at what we saw today in the live market, um, what we're seeing here on the S&P is a range-bound market. Does everybody recognize it? Terms both directions. And then once it breaks out, let's make it bigger. And then once it breaks out, it hits a key area. Termination creates the full reversal and heads it up top. Rule number 2 for the win there. And that termination that created the full reversal, that 50-50 worked all the way up to Fibonacci resistance. That termination that creates a full reversal, that was 50-50, didn't work. 50-50 doesn't work. 50-50 doesn't work. 50-50 does work, right? Are you seeing a pattern here? But the clear path makes money. And it might have bounced and worked. But if you just scroll back and you look at how many 50-50s don't finish the move. Not a lot of people do that. 50-50, push deeper. 50-50 worked. What happens is you start to recognize, well, shit, maybe these 50-50s don't work as often as I hope they do. Maybe these 50-50s aren't the best of the best trades. And I'm not saying that you shouldn't take them, but it tells you, man, let's take them perfect. Let's take 50-50s perfect. Let's give ourselves the absolute best chance of success when I'm taking a trade that doesn't give me every advantage that I look for in a trade. That's all I'm saying. And again, guys, I'll never tell you what to do. That's not my job. My job is to help you read indicators to help give you a statistical advantage. Haji says, high probability trend trade, odds favorable momentum, clear path, perfect entry, beautiful, beautiful exit. Hey Haji, did you refine your search a little bit? Because you found it beautifully. From 19 to 44. What was that? $250 per contract? Might have worked. And it was yesterday, Haji, that we were talking about how often do they set up? They don't set up enough. Should I be looking for more? Sometimes you just got to wait for the best. And man, that was beautiful. Absolutely beautiful. I'm telling you guys, the less you look for, the more you find. And I know that sounds weird. And then once you find them, you learn to manage them. And once you learn to manage them, like everything falls together. It's so much fun. All right, Miss Cindy, you did have divergence. And whoo, you entered against everything, right? All right, so I'm gonna turn this into a chart read because all you told me was strong triggers on the small chart and divergence on the large chart. Divergence on the large chart didn't happen until here, but let's go through just the whole idea, patterns that repeat themselves. And I love this. Large triggers are up, large triggers are strong, small smash through the area, the large don't quite. So we've got a 50-50 scenario from a bad top. Does everyone remember? We just talked about good top, bad top. Midband's the first target. So Cindy, when this pulls back to the midband from a bad top with all of the triggers still going up, you said, well, hell, I'm going to expect a bounce and continuation. Does that sound about right? I know you would never say hell because you're Miss Cindy from Miami. But isn't this pretty cool? So a bad top, we know that the midband is the first spot. And because the midband is the first spot, you're saying I'm not going long here on that ugly 50-50. I'm going to let it push lower and we'll see what happens. Did you take the close on the correct side? It's hard to see your price, 0675. It looks like you did. It looks like you waited for it to get to the right side of the small triggers. Or did you just hop in at the one-to-ones? It's this bar, I think. Let me see if I can see your timestamp or your price. 0675. So you were in with the triggers still coming down. All right. A little aggressive. No worries. It was a great read. Then you take profits at the trouble spot and you take profits at the next pink line. So the only thing that I can tell you about NASDAQ, Cindy, and this is just from experience, is when you make the decision that you need to go long, right? It is. When these small triggers are absolutely screaming against you, your most conservative entry is the close on the correct side of the smalls. And what it does for you is you've already established your risk. The large chart led the way, but you're not fighting that immediate momentum. Because the one thing that so many people forget about the NASDAQ is the workspace. This is a 13.2 that you're entering on. It's not a 5.1, it's a 13.2. It's literally the large chart from the other scenarios. And that downward momentum for NASDAQ trades can absolutely destroy a trade. And that close on the correct, I love it. And then let the triggers roll. There's another opportunity to take that same style trade. And then the really conservative one is when it breaks back above the problem area and snaps back. And there was one right there too. There's a lot of opportunity in that trade based on chart reading, but it was your large chart that led the way. It was the bad top. It was the mid band for the hold. The large triggers never blinked. They were all above those areas. Um, I love this trade. And I love that you got paid on it. Nicely done. And the fact that there was no divergence on the pullback, that one helped even more solidify. It's a little aggressive, but it's a great chart read. Nicely done. All right, Haji. So there we go. Weak bottom, 50-50. And Haji, did you catch the lessons earlier on this one? And I know that we're refocusing, right? That's the one that could have kept you out of this one. Look at the entry though. And guys, this is huge. And the question is, was the stop too far away? The answer is without question, Haji. So where was your window of opportunity? From the highest point of support to the lowest point of support inside of favorable large triggers. That white box is where the market was most likely to bounce. Wouldn't you agree? Does everybody get that lesson? You nailed your entry, brother. I mean, nailed it. And the cool thing is the market gave you a reversal bar in the direction of the trade. Remember, this is a 50-50. This is a medium probability. This isn't the best of the best. The simple pragmatic rule says once you get that reversal bar, your stop can go 2 ticks below it. Could you imagine losing 4 ticks instead of 32? What a difference on a 50-50 trade. Does that make sense? Man, if it's high probability, even that's a big one. Because even if it's high probability, if that market drops 4 or 5 ticks below support, man, it's out of my wheelhouse. I don't want it anymore. I'll look for a re-entry. Um, but this one actually gave you the reversal bar. This one said, hey, Haji, if we're going, brother, we're going from here. Look at us go. And your risk is virtually nothing. And the cool thing is it went up to 99. You could have taken $100 and gotten out break even with that super pragmatic, simple, emotionless, not hoping, not wishing, or wanting approach. That made the $100 goal. I love it. And the lesson doesn't happen if you don't post a picture. So the lesson is good. The fact that you're willing to post a picture is outstanding. Thank you for that, because that's a great lesson for everybody and one that we all have to learn. Look how the termination created an untradeable bounce. I love that phrase. Areas where decisions are made can create an untradeable bounce. 3 divergences in the same location. Divergence, ugly. No areas inside of favorable large triggers. Did anybody go long here and get stopped out? It's okay if you did. Share it. Show me what you're doing. It doesn't mean the trend's over, guys, but you can literally see the fights that are happening. Bad bottom. Price hits resistance. No reason to go long. Market comes back. Pivot stop out at support. Now we're just waiting to see if 7208 decides to break. But that is an awesome look for a potential bottom, but we still have trouble above. Does that make sense, everybody? This market has been railing down. Down, 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 down. It doesn't quite make that 71 fib. They want to, but they can't. When they hit resistance, they finish their move. And if that's all the sellers wanted, it's a great opportunity for the buyers to take over. This could be the bottom. This could be what starts crude oil up. Or the 138 divergences, or 138 fibs and one-to-ones and all the triggers below, this may just be the bounce point for more down. The reality is I don't know. Without the magic 8 ball, guys, I just don't know. So there we go, second hour. You guys made it. There's our reads. I want you to ask yourself right now, like, what's the one thing I wish he would talk about? Do you guys ever do that? Do you ever wake up and go, man, I hope he talks about this today? I used to. I used to want my brother to talk about continuation or using the gap theory to your advantage. And there was always something that I wished he would cover, and I never asked him to because I didn't want to be that guy. Guys, if there's something that you woke up and you're like, I want to know more about this. And here's the other thing. There are 35 people in the room. 5 of you have posted trades. Have 30 of you sat on your hands and done absolutely nothing? Or are you so confident in what you're doing that you really don't need help, you're just hanging out? Because that's cool too. I like the company. But don't pass up the opportunity to get feedback, guys. Don't pass up the opportunity to have someone look at your charts that understands them. To minimize your learning curve, post pictures of your trades in class. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, but long-term failure. How will you know the difference? To be sure, you need feedback. Here to help. If you place a trade on the simulator, participate in class, there's no risk of loss or capital. You need someone to tell you what you did right or wrong. That's it. It's part of the educational magic, guys. 15 hours every week. I am available for private sessions in this room. 15 hours every week. I will answer any question that you have, and if I don't have the answer, I'll find the answer. I have amazing resources. I grew up with the guy that wrote the software that created the algorithm. Um, so don't be shy. I think that's half of it, right, Don, is being able to look at it in the moment and decide what's going on. For me, and some of you guys may have been this way and some of you weren't, and I'll show you the natural progression, I think, for the average trader. And maybe I'm not normal. Maybe my case is unique, but I'm going to do this. Perfect high probability trend trade long. In the live market, when I'm watching it and everything's going and everything's happening and the reversal bar happens, I'm like, okay, hold on. Let me turn my attention back over here. Do I have odds favorable? Let me think about odds favorable. The smalls are up. Are they trying to pinch? Are those really wide, large triggers? I don't know if they're wide, large triggers. I think they are, but I don't know. I'm not sure. And by then, the market is about right here. And I'm like, oh, is that a good top or bottom? That's not a good top or bottom. Maybe this isn't the best trade. Shoot, I don't know. And by then, the market's right here. And then I finally go, hold it. That was a trade. And the market's right here. And I'm like, well, shit, I missed it. Has anyone else done that? This is what I did in the beginning. It was like thought process, trying to analyze it, try to talk myself out of it so I don't take a loser. And then when I finally realized that it was the perfect trade, it's already gone. And I'm like, well, dang it, now I can't take the trade, so I'm not going to. Other things that I noticed, but my small triggers turned against me. I'm worried about that. What does this divergence mean in the sake of it? Is it going to go to this one-to-one? And guys, your brain is spinning in the beginning and it's trying to get all these answers and they're just trying to do it rapidly, right? And then eventually you get a little bit better at the read, but your patience isn't there and you find yourself getting in up here at the top. Oh my gosh, I'm going to jump in. I'm not going to miss it. Everything is strong. And then you put your stop just above the midband inside of favorable large triggers and it's a loser. And right here you realize that you should have been in that trade. And this is all part of the progression, guys. This is all normal. So the reason that we spend more time on pictures, the reason that we spend more time taking pictures, talking about pictures, looking at pictures, is because if you look at 100 examples of exactly what it looks like when the rules are met, if you look at 100 examples of odds favorable momentum, of clear paths, of beautiful entries, and you do it without the adrenaline, without the nervousness, without the questioning, all you're doing is burning this look into your brain. Well, what happens is when the market is moving, it becomes easier to analyze. And look at that, resistance for the win, right? So your ability to recognize a termination condition in a fraction of a second, which is coming, keeps you from trying to get in at this midband. CDAB, a momentum trade, is exactly what it sounds like. It's a trade that takes advantage of momentum. When a termination creates a full reversal, that's the first part of it, and the triggers are strong everywhere. There's ways to take advantage of it. The momentum trade is right here, the rules for it. So a momentum trade is a good top or bottom, the same thing that you learn about in the high probability trend trade. Trigger lines can't get beyond the Fibonacci areas, tops or bottoms. Again, trigger line position is something that we learned about in the high probability trend trade. And when you can define a strong termination condition on all your charts, right? Fibs on the large chart, three divergences on the small chart, that's the best of the best. And then making sure that you're not trading directly into a Fibonacci-based termination. Again, your high probability trend trade chart reading identifies these areas. So you know exactly what they look like. So you're falling back on everything that you learned in kindergarten. The more room, the bigger the target, and then finally rules at the area. Small chart pinpointing the entry involves looking for a specific indicator such as lines, midband, one-to-ones. When the small triggers are at or beyond the area used for entry, utilizing this technique will define the area for each trade. And what it ends up looking like, CDub, is very similar to that right there. Taking advantage of a situation that allows you to get up to the next trouble spot. And that one isn't rules based because it's not a no triggers through. The momentum trade is amazing. And the reason that I kept saying everything you learned in the high probability trend trade is because it's so important that you get that high probability trend trade down, that ability to read the indicators. Because when we talk about the most broken rules on momentum trades, funny enough, no momentum is the first one. Not having momentum on the charts, weak triggers, stuff like that. And the second one is indetermination conditions, not leaving yourself any room to get to a target. And those are two of the biggest pitfalls on here. But you really kind of learn how to embrace, accept, understand, recognize, and trust those two items through the high probability trend trade. And that's why we do things a little cyclical. Termination, full reversal. Whew, you're busy, man. So just curious, C-Dub, do you have individual pictures for every one of these trades? And another question, because I know that you're still in the learning process, and again, guys, you can do whatever you want. It's not my job to police you. Why three large charts? Because if you look at it, the 34 is a determination, and the 21 is against the trend, but the 13 makes sense for the shorts, right? It conflicts. there's so much confliction between this many charts that it forces you to give one precedence over the other. It forces you 34 said down the whole time, right? And that's cool. I like it. But if the 34 said down, odds favorable, let's go through this. Because you can use them. There's people that use them. I just think it's a lot to take in. So let's look at where you circled. The 34 hit a termination condition and gave a tail. If I circle the tail, it lines up at resistance with every trigger going down on the 21. And it also lines up with resistance with every trigger below it. And it lines up with resistance and a close below the small triggers. So down odds favorable momentum. Gap theory short side. Termination condition, no more longs. Close below small triggers to take a shot. So if you're going to let this chart lead the way, there still has to be the trickle down a little bit. And I think what that'll do for you, C-Dub, is it'll keep you from jumping in short without momentum, right? Because the large chart said don't do it yet. And then it'll keep you from going short again into a mid band without momentum. And it'll keep you from going short into support and short into support. And or if you did take this one, it'll just keep you in that trade forever until things slow down. So many ways to use them, and I love that you're taking shorts and you're following that higher time frame. Just remember that there's a lot of fluctuations. So where there's 15 to 30 bars here, inside of one bar here, it's the same thing going this way and the same thing going that way. So that's a lot. Pretty cool though. How did all that craziness work out for you? Are you making money trading with the 34 direction? I'm a big fan of proofs in the pudding, right? If you can create a plan that embraces this and you can get paid, then dude, keep doing it. But I have to make it a little educational. Gary, I didn't have any problems this morning. I don't know. I don't have NT8 up right now, so I'm not sure. Do you have different data feeds? Because if NT8's on Apex and NT7 is on Top Step, one of them may have a challenge with the data feed. And I would assume that it's Apex if it's lagging behind. Um, but I don't know for sure. Pivot stop out, no triggers through. There's another long trade that doesn't appear to be working. Does everybody see it? Rule number 2 not met. Sometimes it stinks because all the money can't be yours. There's a 50-50 from a pivot stop out at support and a higher divergence. One divergence in there. Does anyone else say, you know what? Maybe I'll take a shot at that one because of the termination that creates the full reversal. I'll let one divergence not scare me, but I'm not willing to risk a lot of money on it. And it's still a 50-50. It's still areas not broken. It's 2 areas not broken. Does that make sense, everybody? KISS plan says don't do it. Termination, then a higher divergence, strong triggers, says if you're going to give it a shot, that's it. 24 has divergence up. The 13.2. Oh, the 21.3. That's just too much thinking for me, C-Dub. Show me your 21.3 chart. Let's see if we can do that. Look at that. 3 divergences in the same price location. Third divergence is higher than the previous, coming from a key decision-making area. Strong triggers, smallest smash through, but divergence could kill it. Are we willing to risk that much, hoping that divergence doesn't? Man, I'm not, because it's still a 50-50 with divergence. Maybe we'll say a reversal bar on the large chart takes me out. Your pain tolerances have to be your pain tolerances. I need a reversal bar. Otherwise, if it comes below my triggers, I'm calling it a day. And there it goes, 50-50 with divergence. Right to the stop. 50-50 with divergence, right to the freaking stop. Man, if only I had some sort of plan that optimizes my chances of success to keep me out of that trade. Guys, I'll show you losers all day long. I don't mind. Especially the ones that break the rules. Paul said no trade. Paul said, Mark, stop the jackassery. You know that violates the KISS plan. Why are you doing it? But Paul knows he's not allowed to call trades in the class, so he didn't warn me. He didn't give me any red flags. He said, all right, I'm going to let him take a loser. Oh my gosh, C-Dub. I like what you're focused on. You're focused on this, right? Not the 1, 2, 3 levels of resistance. Every trigger below it. Large triggers still down. Small triggers not even close. Nothing about this chart says up yet. Look at your large triggers still down. Does that make sense? So, and thank you for this picture. So let me show you one of the cool things about 50-50 trades if you're going to add charts. Thank you for this picture because I don't have a 21. So I'm going to take a picture of your 21, and then I'm going to go through and I'm going to take a picture of this one here. And I want you guys to see this cool thing that you can do if you want to add charts. And C-Dub, maybe this will be helpful for you. I hope it is. That's always the goal, right? Is to be helpful. So the basic KISS plan. The basic KISS plan says if this isn't perfect, let the small chart be. Does that make sense, everybody? If the large chart isn't perfect, if it's a 50-50, if it's not a clear path, if it's not the best of the best, don't the entry rules for the small chart say, let it be perfect, let it be strong, let it be no divergence, let it be freaking amazing to take a shot at that trade? Does that make sense to everybody in the room? It's the trickle down. If the large chart isn't perfect, if I'm forfeiting advantages, let the entry chart be perfect. Yes? So the same can be true if this chart isn't perfect, if it's directly in determinations, if everything is ugly about longs here, doesn't it make sense to have a clear path on the 13.2? And this is a great lesson, C-Dub, because I see this a lot. I see people looking for 50-50s on the 13.2 when the 21 is directly into a termination. And then the flip side of that is, C-Dub, if my 21 at the time, let's get some stuff off of here. if my 21 chart, C-Dub, looks like that, well, then a 50-50 on the 13-2 doesn't scare me so much. I hope that makes sense to you guys because that's the whole deal on the 50-50 is if the large chart isn't perfect, let the small chart be, right? Don't keep sacrificing advantages. So the second you begin adding time frames, you have to impart that same wisdom. If the 21 and what does your 34 say, C-Dub? My guess is your 34 still says down. Yep, sure does, doesn't it? So the 34 says down, the 21 says terminations, the 13-2 says 50-50, and we get this ugly bounce. And I bet you this retest to 71.93, did it hit the large triggers? Oh, it came back and it closed the gap right to the small triggers here. Isn't it crazy? They all work together, guys. And this is why I think too many minds is a bad thing. I'd rather just say that 50-50 has divergence. Don't take it. For my brain, that's a lot easier. Not everybody's brain is the same, though. Guys, I'm going to take 5 minutes. I'm going to go stretch my neck real quick. It's hard to sit in a chair this long. Maybe you guys don't have problems with it, but it hurts me. I'll be back in 5. If you have a question, post it. If you have a picture, share it. If you have a funny joke, tell it. You made what you needed. No promise of tomorrow. I like it. Go live life. Amen, Ron. Yeah, I made mine this morning. It's 29 degrees, but I may go try and play golf today. I might bundle up and go swing clubs. I haven't done it in a while. Guys, I'll be back in 5 minutes. When I come back, we're going to finish strong. You guys lead the class. Otherwise, it's going to be a lot of awkward silence. Back in a minute. All right, guys, here we go. Home stretch. And then C-dub. Termination on the 21. Triggers roll. Three divergences. Triggers roll. You take the pullback and it gets you. And then when the small triggers roll, you take advantage of it again. Great patience, C-dub. The first one was a tough 50-50. That divergence pushed it a little bit lower. And then when all of your triggers turned and agreed off the good bottom, it made for an easier entry. You let the fluctuations where it wasn't perfect work themselves out. And then once it gets above the problem area, you're able to capitalize. Some heads up trading, C-dub. Nicely done. It's kind of cool when you get that clear path. Makes it a little easier. Nice trading, man. 50-50 with divergence pushes lower. C-dub lets it break. Goes to the spot. I like it. There's your S&P. Buyers were able to break out. All right, guys, what do you want to talk about? Last 30 minutes is on you. Let me mute my microphone until the next question comes. Let's do this. Let's just take a picture. I'm going to talk slowly and deliberately. And I'm just going to talk about what I see on the large chart. I see a 50-50 that didn't work. It pushes back to support, large triggers. Pivot stop out, stops the market. Weak triggers, let me know, don't go long. Pivot stop out at support. What an amazing termination condition. Creates all the momentum in the world. Strong, strong, strong. If you were going to take a chance here, that's what it looked like. Super low risk. And now we're at resistance. And you're like, I wonder if resistance is going to hold. And a divergence prints. And you're like, oh, we'll see. And then a second divergence prints. And you're like, I just don't know. Still got momentum, but I don't have a clear path. But everything was up. Just need a second. Is that what you guys got? Termination for the win? Divergence might have given you an indication that that big red fib with no triggers through it could stop the market. Anybody? Same plan it's been for 20 years, guys. Define your termination conditions. Let them reverse the market. It creates a huge advantage. From that reversal, there is an opportunity. There's a high volume area trade. It's in the manual. It's in the Discord resources. It's a trade that I'm very willing to talk about if you're interested. And from that HVA, if it sets up, awesome. It doesn't set up that often, but if it does, it's a great opportunity. We're just looking for strong triggers on all charts. Take the trend trade. And when you get to the next termination condition, sit on your hands. It's either going to reverse or it's going to break. If it reverses, start the process over the other way. If it breaks, go back to the trend trade. At the same time, Haji, and then now you're just taking the trend trade, C-dub, very nice. You just have to build them both in one workspace. So you would literally have to take your S&P workspace, and then you would have to build a crude oil chart, the charts that you need to trade, so that when you opened up the one workspace, it would have both markets on it. Does that make sense? And again, I don't tell people what to do, but Shift F3, Haji, if you turn off your untitled, watch this. Whoops. S&P. Whoops, I have to click on the chart. Crude oil, S&P, crude oil. Shift F3 will toggle between two. What this does for me personally, because my brain can't handle overload. Some people can. I'm amazed by you guys. I know there's people that look at 8 screens, 10 screens, 12 screens at a time. I'm not one of the people that can do that. I'll do this. I'll look at my S&P and I'll say, hey, you know what? That's a termination that pushed it back to support. My triggers don't agree. I don't have a trade. Let's see if there's an opportunity. Well, I have weakening triggers right at a fib with divergence. I really don't have a trade here. Okay, I'm going to sit on my hands. If there is an opportunity, let's say for some reason there's an opportunity right here on crude oil, Haji, I don't get distracted by the other one, right? So if I enter a trade, I'm 100% committed to the management of this trade. I'm 100% committed to the looks on this market. I'm 100% committed to trying to manage this the best that I can. And I'm not dividing my attention, wondering if I'm going to miss something over here. So some people are better at it than I am. Um, I can't watch two markets at once. And then if I take an entry on one, then I am hands off on the other markets and I'm managing my trades. And like I said, I'm impressed by you guys that can do more than one. That's what I do. I toggle Haji. That way I can give my full attention to one thing. Because if I'm trying to look at two markets and maybe two trades and 7 rules, then I'm trying to decipher everything between the two things. Um, but if I'm just focused on two charts and the rules, they're either met or they're not, right? And if they're not, well, then I'll go see if they're met over here. And if they're not met over here, well, then looking at both at the same time, again, you might be able to do it with no problems. And I think it's awesome, you guys that can. I can't, so I toggle. So Shift F3, or, so for example, this is my crude oil. Um, I can take, whoops, I can take an S&P chart and I can build like a 5-1. I'm doing that off to the sidelines here. I'm building a 5-1 and I'm just going to give it like 3 days so it loads super fast. So what I can do is I can take my crude oil workspace. It's a pretty common question though, so I like to do it. And what I would do is I would take my 5-1 and I would tighten it up, and then I would take my 13-2 and I could tighten it up. And that's not a bad option for some people. And then on the exact same workspace, now I've got a 5-1 for the S&P, and then I would have to build that 13-2. So I would need to be able to get the information. But there's a lot of people, Haji, that are good at this, that can pull this one off and have the two and then just save it. And maybe you've got it on two different screens, right? You've got two charts on one screen, you've got two charts on the other screen, and then you've got your video poker on the screen in the middle. So you're not really distracted. They just never come up. So. I'll do that. I have my market flow chart and it sits behind me playing video Scrabble so that if it's not met on the large chart, I don't bother looking at the small chart trying to get me talked into something. But isn't it awesome? Three divergences in the same price range may terminate the trend. Pretty cool. And then C-Dub just saw it as the mother load. He's like, I've got terminations on every freaking time frame. We're going long until further notice. Really well done, C-Dub. Nice job. Guys, what do you want to talk about? What's next? But it really can be that easy, right? Trade with the overall trend. Trade with the direction. Go with the large crowd. Oh, awkward silence. Not quite weakened. Weakening, but not quite weakened. Clear path. Just draw little circles. If the small crowd fought, could we have an idea of where it may bounce? Maybe. If it reaches support and all the triggers are above it, doesn't that become an area likely to stop the market? This is just what I go through when I talk. Everything says up. My triggers are good, not the best. My path is clear, and I've got one stinking line inside of favorable large triggers. Is it worth the risk? That's what I have to answer. I have a termination that is pushing the market down, but it's pushing it down into support, one-to-one support. All the triggers are above it. I can't really go short into terminations. I can't really go long fighting everything. So guys, this is where, as you grow with the software, you start saying, well, a decision was made. And then multiple divergences kind of confirm it. Maybe I'll take a shot before everything's perfect. Absolutely. So 50-50 on the 21, right? 42 is your lineup spot. So it's not perfect on the 21, but it's odds favorable and screaming. It's pretty good on this one too, and it's pretty good on this one too. C-Dub, do you see how all three agree? And you're coming from a termination that created a full reversal? Oh, maybe they'll come back for you. Maybe they won't. Those cameras in your office are probably going, man, C-Dub has been doing good things today. Let's not come get him. Let's go hit that red fib before. That's the worst, isn't it? You're like, I know where it's coming from, and they just don't come get you. And you've just got to say to yourself, well, that's just not my money. That's okay. There's so much money to be made, guys. Billions of dollars every year. You don't have to make billions of dollars every year. You make a couple 100,000 and life's comfortable. You know, life is comfortable. My wife was interviewing with a company in Stuart, Florida, and I looked at the medium income, the medium family income, household income was $80,000 a year. 80,000. Guys, that's $300 a day. $300 a day with your software puts you at the medium income, right? 600 doubles it. I love realistic expectations. C-Dub, they done you wrong, my friend. They done you wrong. That's low. I think it's low too. It's Florida, so there's definitely a mix. I think it's closer to 150 in the area I'm in. So every part of the country is different. But what I'm saying is it doesn't take a ton of money to live comfortable, right? It doesn't take $2,000 a day to be considered successful. At $500 a day, guys, that's $126,000 a year. If that's all you pull off every day is $500 a day, and then shut it down, it's $126,000 a year. Termination determination. Gap theory is in effect. Large triggers are above the reversal bar marker on the S&P, which means that with these FIDs and mid-band, price is likely, not guaranteed, but likely to close the gap back to the trigger. Should we see if it does? And CW, you're in LA though, right? So you have to make money to live in LA. We were looking at, when we were in San Diego last year, we were looking at it. It's shit, you got to make 100 grand a year just to pay the taxes they charge you for living there. I'm in Texas. Entiendo todos. That's why you live in Arizona? Arizona's nice. Texas is a no state tax. When we were in Oregon, it was ridiculous how much they taxed my wife to be there. It's crazy. And you guys don't do that silly time change either, Josh. Perfect world. Wild West. I went to, nice, C-Dub. How many trades? How many round turns on that one? 20 all day? With all those, you only have 20 trades all day? If you wasn't on Sim, you'd be 5. All right. You're building habits, though, on Sim. Building habits on Sim. I went to school in Arizona, Josh, in Phoenix, North Phoenix, and it freaked me out the first time I saw somebody walking around with a big revolver on their hip, because Texas hadn't become that enlightened yet. I was like, what the heck? Oh, it's awesome. Because I'm telling you, if the guy with the revolver on his hip is in the liquor store, you're not robbing the liquor store. Because you know your chances of success just went down dramatically. I won't turn it into politics, but I'm a big fan of open carry. Yeah, me too. You'll never know if I have my gun on me. I don't want to give it away. I don't want to be the guy that gets shot first. I've got a good buddy that owns a security company and teaches concealed classes and stuff like that. And he's like, dude, he goes, once the bad guy sees your gun, you're the first target. So keep it concealed. But that has nothing to do with day trading, does it? Look at that termination. It's still holding. I wonder if it's going to close the gap. What do you guys think? I just don't know. Day trading supports your hobbies. I love it. What do you do, Josh? Shoot guns? Let me guess. Ride motorcycles in the desert? That was one of my favorite things. Was going dirt biking on the fire roads north of Phoenix and fly with the dead. Yeah, my wife wants to get her pilot's license. I've outgrown motorcycles. I can't do those anymore. I just don't trust people on the road, and I hate to jump. Ah, that'd be awesome. She's so busy. She's running a hospital right now. Lyle, you show me. You show me the great opportunities in crude oil. Where do you see them? Help me out. Did you see a long in there somewhere? It's the last 90 minutes. Because maybe a short that didn't work over here, that third divergence printed. And the Josh says the 5-1's been outside of the favorable. The 50-50 with divergence Didn't work. Push lower. C-Dub did an awesome job of letting it break and everything going in the right direction and catching it. If that one made it to the mid band, might have been a good one. Coming through here. I don't see a momentum style. You were long at 72.08 when it broke above the area, Lyle? Did you get it on this side or that side? Left or right? We'll make it easy. Where are you talking about? Over here? Oh, this was just me. This wasn't a real entry. This was me talking about when we were talking about looking at more than one market at once. So what I did is I entered that trade and then I went over to the S&P to show you visually that I can't manage a trade if I'm splitting my attention between the two. And then Don. So Don, let's talk about what we see here. Nice. Great patience, Lyle. All right, so Don Sanchez, inside, right? The small triggers are inside. There's one line. There's another line. That's textbook weakening of the large triggers. Textbook weakening of the large triggers. And let me go back. And this is what I always like to do. And thank you for asking the question. Best of the best. Weakening. It doesn't mean that it's going to stop, Don, but it means that that advantage of momentum has gone away. And I always like to stress that to you guys. This market could go up forever. It could go up and never stop, and we could be paying $1 billion for crude one day. And it's railing and it's got a good run. But since the triggers are weak, you may want to look for other advantages out there. Guys, give me just 1 second. I'll be right back. Sorry, my dog has finally learned how to tell me she needs to go out, so that's a good thing. But see how they're weakened, Don? Which means that anything can happen up or down. So if I get a retracement over here, which one is it going to be? And this is what I like to do. If I do get a retracement over here with weak triggers, is it going to be back to this fib or this fib? Is it going to come back to the mid band? Without the advantage of momentum, I'm just not really sure which way it's going to come. So that advantage of momentum makes it a little easier for me to discern. The stronger it is, the less likely it is to pull back. Your favorite look, divergence everywhere. I like it. Look at, I'm assuming that's just a leftover order, C-Dub, because you're right into resistance, right into resistance, right into resistance, weak, weak, weak. Um, that's awesome. And this may be the spot for a bounce, right? And that may be the perfect entry. Hell, I don't know. You're like, oh man. The worst is when you hear it fill and you didn't know that it was there. And you're like, oh my gosh. But that's a great bottom, and great bottoms take you right up to problem areas. So weak triggers at resistance, weak triggers at resistance, right at resistance. Maybe we get a little bounce. Maybe we get a little retest. And let's use C-Dub's chart. If this retested back to the mid band, you're looking at like 72.50, right? And that all lines up with the mid band on the 13 too. That's a strong trend right there, though, guys. They are pushing it to the upside. They are cranking it to the upside. We've broken one, two, three areas, four areas. We've had more than 30 bars. This is a strong trending market. Still have to respect terminations, but this is one of those looks where if you have, let's say with a clear path and strong trending, a little pullback to the mid band all day long. I love that look. I'll keep taking that one until it doesn't work because it is a strong trending market. Looks like the termination condition worked. Good stuff, guys. Great class today. A lot of good questions in there, a lot of great pictures. Always appreciate the participation. Gap theory never worked, did it? Where the market shouldn't go, Josh. I know it's the Sunday school answer. Where the market shouldn't go. If I get in, let me take the picture. Whoops, that was the worst picture ever. If I get in hypothetically, right here, and I have a stop, right? And everything's running, market pulls back, goes up, that's a great spot, a pivot. They've already tried and failed. Great spot for the stop. And then at this point, it would be ridiculous for me to put my stop at a mid band right there at the triggers, right? So my stop would stay in place until the next pivot. When the next pivot forms, I may run it again. When everything is right here, if I get a pullback, where's my window of opportunity? My window of opportunity is really right here. So my stop has to go where the market shouldn't. And I just continue that trend all the way up. Anytime I'm holding for the bigger move and I'm holding for the bigger run, I ask myself, if I get a pullback, where is the market likely to continue? I can't put my stop there. Because there's nothing worse. Yeah, they know. They know where the scared people are putting stops. Um, but the reality is that we all did it, right? Farrak, tick replay should be on so that you get your synthetic triggers. So let me find a cool picture real quick. And this is in the spreadsheet, Josh, because it's so common. Beautiful entry, quick profits, odds favorable, clear path. And look at the stop right at support inside of favorable large triggers. Has anyone else ever done this? You're like, well, I don't want to risk too much, so I'm going to put it right here. And then if you just go through the rules, that's your entry. Not that. So what you've done is you've given it all back. Everything that you made on the beautiful trade, you just gave it back by putting a stop where the market should go, not where it shouldn't go. Um, Let me see if I have another one of that. I thought I had more than that, but maybe not. But that's pretty common. And then the other side of that is if you took $300, this is what I like, is if I just exited at 15, 5, 15, 25. So if I just exited at 15, at 25 and I made my $300 and then I entered again at the area inside of favorable large triggers at 19 and took it up to 39 and made my $300, isn't that easier than trying to always hit a home run? And you're going to miss them sometimes. There's a guy that I talked to. He's been trading with us for a couple years now. And he changed his entire outlook where he stopped trying to hit home runs every time. And he said, I'm going to hit base hits. And the reality is base hits add up quick, Josh. They really do.
And you don't have to always get the full move. Um, and I don't think mine's in there. One of the things that I incorporated just from you guys, from watching, from Ron, is taking a momentum style trade, and that was $200 in about 6 seconds. And it was easy. I had momentum and a clear path, and it was just in and out, and it was so easy. And then I had one, I don't know where it's at, where I took a long, and it was effortless because everything was in there, and I just got paid, and I made like $400, $450, and then I got out at the first sign of trouble, and life was so easy. Look at that termination. Look at the bounce. Um, Let it be easy. Well, it didn't, Paul. If you had your stop in the right place, you got stopped out. But if you were C-dub, you took the continuation style because the large chart never blinked, and there's your snapback right to the areas right inside the small trigger, and you were able to capitalize on the rest of it. So good stuff. Went to drop the kids. There's a poop joke there that I'm gonna avoid. So, guys, that's it for today.